If you're a Tesla investor, today's show will be incredibly important and valuable for you to watch. Many people who follow Tesla stock use spreadsheets to calculate future earnings, and they show you how Tesla's doing as compared to the traditional auto industry. But they're missing something very big. Tesla is a disruptive technology, and traditional automakers are falling right into that innovator's dilemma. So, what does this mean for Tesla stock? Larry Goldberg is with us today, and he has written a very, very comprehensive explanation. There's great wisdom here for Tesla's valuation. Welcome, Larry.
Thank you, Herbert. Great to be here.
So you just posted this very long, super comprehensive analysis, not just on how people should evaluate Tesla stock, the valuation for stock, but you then explain the market between, in this case, the auto market, which is, Tesla's approach, and how they're completely disrupting the traditional OEMs and how the OEMs won't be able to compete. And what I like about your post was you're very comprehensive. You actually break it down into all the different things that the traditional automakers are doing that are actually now a disadvantage because of what Tesla's done. You want to start us off with any comments on that?
This post was written in 2020, and it was written, and I posted it on LinkedIn as a blog, and I resurrected it because it seems so appropriate to today's, buzz about, how badly Tesla stock is doing, and it's no longer the Magnificent Seven, it's the Magnificent Six. And, I remember that I wrote this as a result of Rob Maurer of Tesla Daily, the late Tesla Daily, interviewing David Traynor, who's David Traynor is a highly respected analyst, and he explained to Rob in clear terms why Tesla was going to fail against the OEMs, because the OEMs had, dealer network, and they sold parts at great profit, and that they had all of these factors that Tesla didn't have. That finance and all the other reasons. And at that time, I was also looking at the valuation that Damodaran, Professor Damodaran, the so-called, professor of valuations, was doing on spreadsheets about Tesla and coming to much lower numbers than Tesla was sitting at in the marketplace. And, I thought to myself, these guys are missing the point about innovation. They don't understand how to value an innovative company. And, I fell back on the writings of Clayton Christensen, Harvard professor, who actually defined what innovation was, who really opened our eyes to what innovation was. And he said that when disruptive technologies emerge, dominant, well-run companies often stumble. These companies use the same sound business judgment that's guided them through previous changes. And then he goes through, they listen to what the current customers want. They provide more improved versions of what the customer wants, investing in projects that promise the highest return. Sound familiar? Well, that's exactly what, microphone took a tumble. That's exactly what, David was trying to tell us. But they're missing the point. In innovation, what we're doing is we're turning everything upside down. We're creating a new product, a new market, a new way of doing things. And what happens is that the legacy, in this case, the legacy OEMs, are suddenly in terrible trouble, because their investments, their costs, their habits, their methods are all about the old product. And they can't easily make the new product. And the problem is they're earning a lot of money from the old product. If they suddenly turn around to make the new product, all that money that they're earning and that is putting value on their company, on their stock, paying their wages, paying their bonuses, paying their earnings on their shares for their shareholders, all of that disappears. and they're in the same boat as the new company that's starting from scratch with possibly very little capital, but is gaining very rapidly in their marketplace. So how do you value that new company? And by the way, how do you value the old companies? Because, those rising sales, those rising margins, those cash accumulations, those dividends, those buyouts, they're suddenly not going to start. They're suddenly going to stop happening. And then how do you value the new? How do you build a spreadsheet? You can't project, sales are rising at 50% per annum. That's crazy. Nobody does that on the stock exchange. Nobody does that as an analyst. You can't project margins that are out of kilter with the industry that you're covering. So how do you relate? So you have the valuer's dilemma and you have the innovator's dilemma. And by the way, the innovator faces his own dilemma. Because once he breaks the mold, once that mold goes away, then new ways of doing this new thing are going to be on the drawing board. So the innovator has to constantly be looking at innovation himself or herself. So what we have is, for the first time in the last, for the last 100 years, for the first time, we're in a entirely new environment, and we're changing the power, the base of power. We're changing the base of manufacturing. We're moving from molecules to electrons, and so a whole new set of industries are going to be created, and a whole set of old industries are going to die. And how do we place value on these new ones, and what do we do about the old ones?
Okay. Yeah, I want to dive deeper into the actual business model, because what you've pointed out was it's not just that there's this new technology, the electric vehicles, it's an entire business model that Tesla has done. And then we'll break down exactly all the areas that is being attacked to the OEMs. And it's not just, car sales, it's the whole infrastructure that's going to crumble. And then you can tell me about the Chinese, what they're doing. But before we get there, let's stick to the Tesla stock investor, right? So many of us Tesla stock investors, I'm here because of disruptive technology. And I appreciate that you've actually reminded me, that this is what I need to wait for, and this is what I evaluate the company for. But it's hard because I'm listening to analysts, I'm listening to other folks, and they're saying, here's the earnings, here's my spreadsheets. Gary Black was just on a space with me and Omar, and they had a fantastic debate. And I'm going to drop that video later today. This is Thursday. And in that interview, that debate, you can hear Gary Black say, well, if it's just FSD, let's not take robotaxi, but just FSD, here's what I see will happen until 2030. It adds only $2 per share. And the fallacy that he's making is that he's like taking what he thinks is going to happen now and then carries it over for in perpetuity for the next 10 years, instead of like realizing that technology doesn't stop. And this then continues to improve, and that he can't get his mind to think that it's going to be more than a 15% uptake. And he thinks it's just going to be this thing. And so anyways, like that's, so how do you tell me again how you have this one, I love in your tweet, let me just read this out to folks. And it says, throw away your spreadsheets, all those CPAs and valuation specialists carefully compounding profitability and cash flow. It's not going to happen. Prices are going to be driven down. Free cash is going to be aggressively invested into plant, charging infrastructure, service centers, AI chip development for autonomy, supercomputers for AI training, power walls, solar roof, autobidder, but no profits and no free cash flow. So Tell me again, like, how is it that I should be looking at this as an investor?
You know what shocked me? What shocked me, this was written in 2020. What shocked me is I was right, but they made profits.
Mm-hmm.
That's the shocking part of this, that they made profits while doing this.
Yeah.
But, to take a spreadsheet and to say, and it'll be this percentage and they'll do that many sales, it's kind of crazy. It is crazy to the extreme. There is no way Gary can predict what the sales of FSD are going to be when FSD reaches the maturity. There's no way, because it's going to change the business model. Clayton Christen said, that the key is not the margin. The key is not the manufacturing technique. The key is not the total addressable market. The key is the business model changes.
Mm.
And so it's almost unpredictable. And so Gary taking a percentage and the sale of that, I mean, it's almost laughable. But if FSD succeeds, the model that Tesla uses to market that product, to market that capability, we can imagine, we can do the imagineering around what is possible and think about that. But to actually draw a spreadsheet up, it's crazy. Throw your spreadsheets away. The valuation opportunities are very wide. Now, what ARC does and what some valuers do is a Monte Carlo simulation. They allow all kinds of possibilities up to the moon and down, fail. And they assign probabilities, and then they let the simulation run, and they come up with a range of possibilities with some weighting. Now that makes a lot more sense to me, because when you are in an innovation mode, when you're going through this innovation, you're changing everything. You're changing, and we've seen it. I mean, the profits that Tesla have thrown off in the last 4 years, which are incredible. I mean, for the auto industry, incredible. For an innovator, incredible. I mean, just far beyond my wildest dreams, is an example of those unpredictable events that can occur. So when we go forward with innovation, in how you manufacture a vehicle, innovation in what that vehicle is able to do, innovation in the software-defined vehicle, all of these innovations their outcome is unpredictable. But one thing's for sure, it makes life incredibly difficult for the incumbent.
Let's talk about that. Yeah. Let's break it down to very, very specifics, because it's not just the technology, right? It's a business model. And I want you to walk me through all the ways that it's almost impossible for a legacy automakers to compete. It's not just what people think, right? So first of all, Tesla invented a new electric vehicle, so a new drivetrain. But it's not just the electric vehicle. It is a software, right? It's a software with wheels. Go ahead.
But you just alluded over a huge point. You said it's got a different drivetrain. Yep. Okay. Think about the underlying issue that I raised, and that is the question of business model.
Yeah. That's what I was getting to. I was getting there.
Okay. Keep going then.
Okay, I was going to get there. It's not just the fact that it's a new drivetrain. It's software on wheels, but it's beyond that, right? Because it is this new model of creating a car. They don't have to have all these parts, and so their whole supply chain is going to be redone. Their manufacturing is all automated now, as opposed to the way that the assemblers of the old. And then the way they sell the car is completely different. The way they can insure the car is very different. So walk me through each one of those, please.
Let's just focus on the drivetrain just for an instant, because we've discussed this on the show before. But when you look at the business model of the legacy OEM, The legacy OEM really does two things. It designs and develops a gasoline engine, an internal combustion engine, which is unique to it. Its engines are its clear IP, and it molds sheet metal to a particular design. Almost everything else is manufactured by a tier 1, tier 2, tier N supplier. And to a very large degree, those suppliers design those things, build those things, and supply those things. And most often, the OEM is dependent upon those suppliers, not only for the supply, but for the design of those things. So the vehicle design is a relationship between the tier N suppliers and the OEM, and it puts those together. That's why it's almost impossible to create a software-defined vehicle, because all the software is made part by part, component by component, element by element, by those suppliers. And so the definition of what that vehicle is by software is being done piecemeal. Compare that to where Tesla is. Tesla designs the drivetrain, the method of construction, the componentry, and the entire electrical and software system. And they provide those designs to their own factories and to those subcontractors or those suppliers that they contract with. They build their own software as a single software unit. 85% of the Cybertruck, they told us, software is designed and built in-house. The next-gen vehicle will be 100%. You know, the Y and the 3 were at 65%, which is about 55% more than is the case in the OEMs. So the bottom line is that before you can even build a software-defined vehicle as part of your business model, you have to actually be able to build a software-defined vehicle. So the business model, which is not really solely dictated by the drivetrain, is already part of the business. It's part of the approach. But having an electrical drivetrain almost requires a single approach, a singular approach to the car. So that business model that GM and Ford and all the other OEMs, almost without fail, outside of China, have is dictated by that. So once Tesla does what they do in terms of designing and building the vehicle in-house, then having a software-defined vehicle, having a vehicle that you can change the software and it changes the experience of the buyer, that becomes possible. And then all things flow from that.
Yeah, tell me about the dealership, right? No need for dealers, and the business model that OEMs have for dealers.
You know, this is one of the areas that, David Traynor explained to us why Tesla was going to lose the battle, because, the OEMs had all these dealers and, these dealers provided such a huge advantage.
Yeah.
But the true, and there are some advantages. You lay off the need to hold large inventories to the dealers. You depend upon the dealer to sell your car. You pay the dealer to, service your car. There are a lot of advantages to it, but it turns out to be a nightmare for the customer.
Mm-hmm.
The customer hates being sold a car by a dealer, because the dealership turns that into a torturous process. We all know that. We've all had to have the salesman say, well, I'd like to talk to my manager about that whole, and then he goes off to have a cup of coffee while he leaves you hanging and then none of that happens with Tesla. The advantages, though, are enormous. The advantages are that you don't have this kind of sales experience. The advantages of an electric car is you don't need those services. You literally don't need the service. I've had 3 EVs over 5 years, 6 years, and I'm yet to actually have to take my car in for service. I paid $65 over 5 years for all the services I need for the car. So part of that is the quality of the Tesla manufacturing, which is very important, but a large part of that is the simplification of the drivetrain, the simplification of the design. So that's part of the business model that they derive from, the value from. So how does somebody who has this legacy business model of these supplier networks, designing their vehicle practically, of these supplier networks, defining the software in their car by part separately, and this dealer network that they're beholden to, how do they compete? How do they change their model to compete? This is the dilemma that they're in. And, that's a very significant portion of their margin. That is if you look at GM and you look at their margins, you look at Ford, well, Ford's margins right now are terrible, but that's a separate story. But if you look at GM's margins, a huge proportion of their margin is taken up by their dealer network. Take all the dealers, take their gross margin, add it to GM's margin. It's a huge number. Now, can GM change that business model? No, not until they change all the drivetrains of all their models. But they're stuck in this previous model. They can't abandon that model so long as they're still manufacturing legacy vehicles. So it's a box they can't climb out of.
And then tell me about simultaneously there's Tesla, disruptive technology, but disruptive business model, not requiring dealerships. Then you've got these OEMs stuck in this model where they're trying to do both. And then you have the Chinese who are just basically starting from scratch, copying exactly everything that Tesla's doing, but lower cost, you were saying, right? So tell me how the OEMs are being disruptive significantly.
The OEMs were very dependent upon China. They were going to China and they were going to make a lot of money out of China. In fact, they were making a lot of money out of China up until 4 years ago. And they've fallen off a cliff in China. They're closing down in China, or they're being closed down in China. And they're buying Chinese firms to try and solve that problem. But, the Japanese automakers destroyed the sedan business, the vehicle business in the US, and the US OEMs became purely truck vendors. The Chinese are going to destroy the European manufacturers much the way that the Chinese destroyed the American sedan manufacturers.
Japanese.
We have no idea just how dangerous it is. Look, Tesla taught the Chinese how to make EVs. They took the lessons very seriously. And there are a huge number of Chinese OEMs who are building EVs. Now, a lot of them are still going through dealerships. It's very unclear how they're going to enter, for example, the US market. It's possible that they'll enter through Mexico, They're definitely going gangbusters in South America, and they're definitely going gangbusters in South Africa, and in Indo-Pacific. But to get into Europe, they're going to have to overcome political problems. And here, they're opening a factory in one of the major manufacturers, opening a factory in Hungary, which looks like a kind of backdoor to Europe, because Hungary is really sort of a rogue member of the EU, and it's allowing China into Hungary. So that's really a vulnerability the Europeans have. In the United States, the IRA is preventing China from easily entering in the United States. Well, they'll set up factories in Mexico, just as the American manufacturers are setting up in Mexico, and will try and enter the back door then that way. But that's a more interesting problem for them, because they're going to have to manufacture, using the same cost inputs as the American manufacturers. Now, whether they can be more efficient or not is an open question, and we'll see that, and we'll see how Tesla is able to compete with that. But I think that the US manufacturers are going to be in terrible trouble trying to compete with Tesla and, moreover, the Chinese competitors. And the Chinese competitors are going to be tough competitors for Tesla. Tesla is going to have to sharpen its pencils, and that's part of what next gen is all about. The interesting fact is China's going to copy next gen. It's going to copy the unbox process. Those steps have already begun. So it's a race. This is the innovator's dilemma. It's going to be a race, and it's going to be a race not to the bottom, but it's going to be a race to the top in terms of, keep on reinventing themselves.
Yeah. Okay, let's get back to the Tesla investor now. Okay, so tell me about how I should be thinking about this. So I've invested in a Tesla, which is a disruptive innovation technology, but also changing the business model. It's similar to Amazon, right? So some people at the beginning, they thought, oh, the Amazon is just selling books, and that's what they are. They didn't see that Amazon was actually a whole new business model. And they did not famously, want profitability. They just kept reinvesting on their e-commerce platform. And now they don't only own just books, they own the world, every supply chain. And that was their ultimate goal. Tell me about how I should think about Tesla as an investor.
You should think of Tesla as an investor the way I thought of Amazon as an investor when I invested in Amazon in 1998, I think it was.
Wow. Mm-hmm.
I was told continuously, I remember famously in, the .com bust, I was told that it's Amazon.toast and that I need to get out of it. And, I re-upped several times. And I remember re-upping just before it went down to almost zero.
I remember.
That was a pretty painful moment. I will tell you that. It was a pretty painful moment. I mean, it was a terrible lesson, in just how difficult it is for the stock market to value innovation. Mm-hmm. But I could not get past, in my own mind, just how revolutionary they were and how they were continuing to revolutionize. Talked about the innovator's dilemma. Jeff Bezos's answer to the innovator's dilemma was just keep innovating.
Keep innovating. Mm-hmm.
Don't stop. Don't rely upon your innovation. Beat yourself up. They nearly went bankrupt because their IT could not keep up with their innovations. So what did they do? They tore it apart. They reinvented it in order to keep up with their innovation. That became their most famous invention of all, AWS. Mm-hmm. So the reason I'm so high on Tesla is because I see the same level of constant reinvention. They're destroying their own methods. They're replacing their own methods with completely new methods. everybody's excited because GM or Ford have ordered a couple of casting machines.
Mm-hmm.
Well, hello, that was 5 years ago. We're moving on. So what's exciting about Tesla is that, like Amazon, they constantly reinvent themselves. Everybody's crying about Tesla writing to their managers to say, who's not performing? Looks like there's going to be some culling of some people. Well, guess what? Tesla culls every couple of years. And guess what? Tesla has the lowest cost of doing business of any auto manufacturer ever. Like 20 percentage points better than these Chinese, supposedly, brilliant manufacturers. So the reason I invest in Tesla is because they are focused on innovation. They're not scared of, disrupting themselves. They have got multiple different innovation cycles going on in the same company in different products, as did Amazon. People think that Amazon's a reseller. Amazon's a lot more than a reseller. And finally, the reality of Tesla, which is so amazing, is that they still make profits. That's the part I can't get past. I predicted 5 years ago that they would not make profits.
Like Amazon, yeah. But they keep reinvesting. But they're making so much cash right now that they can actually...
It's extraordinary. And so when we look forward at their investment process, they're in an amazing position. Now, we have to stipulate that Amazon didn't have to make profits to accumulate cash. Amazon, one of the brilliant parts of the business model is they would collect cash from their sales 60 days before they had to pay cash to their vendors.
Yeah.
So as long as their sales were going up, their cash flow would go up. And that was the secret behind the company. And that was, one of my investment theses. With Tesla, it's different. They literally have to make profits in order to make cash. So, to an extent, I should have seen that, and I didn't see that.
I love it. Okay. Brilliant analysis. Innovator's dilemma. We got to look at that. Don't fall for this. This is just a regular business, and let's compare the two, the auto, GM and Ford against Tesla, and see how they're doing line by line. No, this is a completely different business model, and if the others really can't copy it, they're just, as you explained, that they're completely upside down on it. And then it's the Chinese that's got the same business model that we have to watch for. But otherwise, it's just going to happen very quickly. All of a sudden it'll pop because the world will become very clear to everybody. But right now it looks like that they're competing. Thank you so much, Larry. This is good. Follow Larry on X at Tesla Larry. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.